This is the Pirate Traders Brigade Captain's Log for the week of March 4th through 8th. Last week, another week of balance with time. We broke out of that balance. So we've got Friday's range. Friday, the market broke out of that balance area. It came back up to test previous all-time highs. It had a little pullback, a little bit of cessation, and then it immediately started pushing higher. Well, what was interesting to me on Friday was not the fact that we pushed higher. That was to be expected. But what did surprise me, once we pushed up, we never came back down. We just went sideways up at higher prices. We spent enough time and brought in enough volume to pull the points of control up here to the upper end of the range. That is extremely bullish to see. So that is a sign. They don't need to pull back. Not yet. So this morning when the market opens, I will be using Friday's high, the new all-time high, as a chop zone high. And I'll be using whatever is the overnight low at the opening bell. I'll be using that as a chop zone low. And basically just assuming for the first hour of the day, they're likely to chop around in that range. But if they get above yesterday's high, if they get above Friday's high and turn it into support, that is very, very bullish that the momentum will continue because it's a bull market, you know. So the market opened and it just chopped and chopped and chopped and chopped and chopped. And then we chopped some more, and then we chopped some more, and then it finally broke out of the chop zone. We're free. Yay, we made it. So let's zoom out and see if we've gotten rid of those nodes of liquidity. We have not. So that, in my mind, increases the odds. Of course, I can't guess when. I can't guess the exact moment it's going to happen, but I do think we're going to pull back into the range by the end of the day. But for now, short covering and FOMO buying, can they bring in enough volume to keep it going? They got some new buying, but not enough to turn the previous day's high into support, so the market pulled back into the range and closed almost where we opened. So I finished off the Brigade stream at the end of the day by saying today we made higher highs and higher lows, so that's bullish to see, but the value area is inside the previous day's value. We trade value, not price. So price was able to make higher highs and higher lows today, but value stayed the same. So that means that we probably don't have as much momentum to the upside as it seems. So my guess for tomorrow is that we might get a pullback to test 51.12 tomorrow. Now we'll look at the private live stream for Tuesday. If you guys recall yesterday, I was talking about the fact that last week's range is a balance area. And often when we break out of a balance area, at some point, we need to come back down, look for support around that balance area high to continue higher. Well, where do I have that marked? 51.12. Okay, that is the level I'm looking at as that balance area high. So essentially the idea is that if we get a gap and go this morning, if the market continues lower, if it just dips below there, if it just dips back into the previous day's balance and then turns around and comes back up, that would be bullish because that would be a back test of balance, which would actually give the market momentum to continue much higher. But if we pull back down below the balance area high and we start to spend time and start to bring in volume down here, well, then that increases the odds that we're heading down to the balance area low. So the market opens, it pushes lower, starts to create a little bit of resistance at the overnight low. All right, this is now bearish to see. We are spending a lot of time and bringing in a lot of volume inside the previous balance area, increasing the odds. We need a bigger pullback. Next potential support is around 51.06, then down at 5100. If we don't get a bounce at 5100, we'll be looking to start repairing these weak references below. It is a gap and go. That is bearish to see. Then the market plays some tricks on us, pushing back up through the opening price once more, but then of course turns around and heads right back down once again. Okay, so this is very bearish to see. That was the last hope the buyers had to get a bounce back up through the opening price. The fact that that support is breaking increases the odds. We're going to have to start heading down and repairing these weak references one after another. So using these weak references will give us a sign whether we still have momentum. When they repair the first weak reference, Is that all the market needs to turn around and head back up? Well, then great. We'll go sideways from there. Second week reference, so on and so forth, until it's finally enough to reverse the market. The momentum begins to fade in the D period as the tempo of the market slows down and the range gets smaller than when we print the E period. All right, guys, that is cessation of the trend, increasing the odds. The momentum to the downside is over. I suspect there will be a set of laggard sellers that will try to take the market lower once more, but once that momentum runs out, the highest probability is a rotation back up to backfill the single prints and for the market to go sideways the rest of the day. Those laggard sellers do step in, trying to take the market lower once again, but they fail to create any momentum, so the market pulls back up and goes sideways once again. So we got a set of single prints that we left behind here in the B period. Those should be able to backfill. If they can't, it is a sign that we might still have more momentum to the downside once the market is finished going sideways and balancing. As the I period begins to turn the C period low, which was the low at the time of cessation, as it begins to turn that into resistance, that increases the odds that the market is going to break lower. And the market heads lower as all the buyers from the E, F, G, and H period begin to get squeezed. Well, wouldn't you know it? A move straight to the opposite end of balance in a single day. So I would describe this area that we are at right now on the ES as the balance area low. This is a place where stronger hand buyers can begin to do business, looking for the market to turn around and head back up to that balance area high. They left multiple sets of single prints and tons of weak references in their wake. So if the market does get what we call a look below and fail, that would allow the market to turn around and head right back up because it's got tons of weakness above in need of repair. Would you look at that? Would you freaking look at that? 1 point below the balance area low, and it reversed right back up and out. That is a look below that fails. That increases the odds. The market will now turn around and start heading back up. I wasn't sitting in front of the computer, but they already backfilled those first set of single prints. So that increases the odds that come tomorrow, we will head back up towards the balance area high. But all in all, it is bullish to see. And now we'll look at Wednesday's stream. So things are getting interesting right off the bat this morning, as we are testing yesterday's high, which gives us a potential, if we can get above yesterday's high, to start to head back up and fill the gap that we left behind yesterday. However, I am making note of the fact that Jay Powell is beginning to speak here in about a half an hour. And one thing that we know about Powell speaking, the market's favorite place to be when Powell is going to speak is right at a balance area high or a balance area low. I mean, the market just loves it because when you're at a balance area high or a balance area low, the market can just chop and chop and chop. So I do suspect we're going to get a lot of chop this morning. Now, I would be willing to go for a long trade to fill the gap, but I would just need to be absolutely convinced that they're going to hold that support at 51.21 before I would be willing to long it. Because the higher probability in my mind, purely based on the fact that we are at the balance area high and Powell is going to be speaking, is that we're likely to chop, at least for the first half an hour today. Okay, so I'm a little more cautious with my entries than I would otherwise be. As was expected, the market spent the first hour and a half of the day just kind of chopping around that balance area high as Jerome Powell was talking to Congress. Okay, so we're now testing yesterday's high once again. At this point, if the market pokes above this A period high, we are likely to get some short covering. So I would expect that there would be a pop and a move higher. To truly get bullish, I want to see that come back down and turn yesterday's high into support. There is a chance that the short covering could lead to straight up getting a gap fill, but in my mind, it is more likely we will come back and test support. Here we go. So the market is now one time framing higher. Can they turn 51.21 into support? The market found support and continued trending higher until it came just 1 point from filling the gap, where it ran out of steam, pulled back down and got cessation, and then began to liquidate lower. The market is rotational. Act accordingly. And if the market gets up to the upper end of the range, up around the 51.33 area again, it is likely to pop up and fill the gap. Man, they are liquidating. The liquidation continued with very fast tempo and a large range of volatility, eventually working its way back up to the base of the liquidation where it began. Finding resistance there was a sign we were going to get continuation lower. All right, so we have new selling. That is a little bit bearish to see. That tells me I would not be interested in going long for a rotational trade here today, as the new selling is a liquidation break plus new selling, which is bearish to see. That liquidation continued lower and lower all the way to the low of the day, where the market reversed one tick from the low, and then it spent the rest of the day rotating inside the day's range. We left behind a poor low, a very weak high, and we closed exactly at that balance area high, creating a very bizarre day. An excellent reminder, you got to be open to anything happening in this market. But still, all in all, they had higher highs, higher lows, and value overlapping to higher. Bullish to see, carrying it forward. And let's take a look at Thursday's stream. All right, well, we have ourselves a gap up this morning. So essentially the first order of business for the market whenever they create a gap is to head back down and test the previous day's high, which is at 51.34. So if they can get to yesterday's high and find support at yesterday's high, that is a gap and go, which would be bullish to head back up through that opening price. The market just chopped around the opening price, bringing in some new buyers above the overnight high. Okay, so we still haven't filled the gap, but the ticks are working their way down to the zero line. So that significantly increases the odds that if we get the gap fill, we will get a bounce, as we'll be right in a perfect place for those new buyers to step in, those discount shoppers. We already know we have momentum because we had that buying above the overnight high. We already know that there are people willing to go long this market, and we know that the gap fill is where the stronger hand buyers would be. They're not going to FOMO in at the high, obviously. So seeing that the ticks are getting back to the zero line, at the same time the price is coming in to that area where stronger hand buyers would be waiting, increases the odds we'll get support at a gap fill. Market filled the gap, immediately found support at the previous day's high, and then turned around and went right back up through the opening price. All right. I'm officially bullish as a gap and go. So that doesn't mean FOMO in right now to a long trade. We will probably still do a bit more chopping around the opening price. But the fact that we filled the gap and buyers stepped in and we got back through the opening price tells us this market has momentum, which increases the odds that we will head to the new all-time high today. The market chopped around the opening for a bit, then pushing above the overnight high, it found support. In the C period, they began one time framing higher and left behind some single prints from the B. In the D period, the tempo slowed, the range got tighter, and then we got cessation of the trend in the E period. That is cessation of the trend. The market is rotational. We have a low volume high, so it wouldn't be unreasonable for the market to give one more poke to the upside. The market then rotated around the upper end of the range for the next hour and a half. Pushed higher in the I period, tried to bring in some new buyers, but couldn't bring enough, so they came crashing back to the POC for the close. All right, so we are closing the day with a P-shaped profile. That is bullish to see. We spent most of the time and brought in most of the volume at new all-time highs. We have higher highs and higher lows on the daily, so we are officially breaking out of balance and trending higher on the daily, and value was completely higher, which increases the odds of continued momentum higher tomorrow. And lastly, let's take a look at Friday's stream. The title of today's live stream, we have momentum. So pretty much I am a bull this morning, assuming the market is going to go higher today. And the level that will change my mind is the base of those single prints. We left behind at 51.48 yesterday. We do have some weak references there, so the market might need to just kind of poke down and take out those weak references. But if they can bring in the buyers there or anywhere above there, my assumption is we're going to make new all-time highs here today. Unfortunately, my replay software stopped working here, so I'm not able to replay Friday for you in real time, but just to walk you through what I was seeing, the market then pushed higher into the B period. And in the B period, I made note of the fact that we had moved very far, very fast. All right, well, the fact that we are spending so much time and bringing in so much volume up here at the high, I am changing my narrative slightly. We've had so much FOMO at the highs that we're now setting ourselves up to run out of steam intraday today, I mean. So now to stay bullish, they got to stay above 51.75. If we start to pull back down into that overnight range too much, then all these buyers up here are going to get squeezed and we'll get a larger pullback through the open. So the C period just kind of bounced around at higher prices. And then when we printed the D period, I once again made the note that we had got overly long, overly fast. So now as we print the D period, whilst technically we are not one time framing higher, the same conceptual idea is basically true, which is that we've had momentum thus far in the day. If they want to keep that momentum going, they cannot dip below the previous TPO. I think all the buyers from the B period and all the buyers from the C period will begin to change their mind if we dip below that C period low. So to my mind, again, they've got to hold these lows. We'll call it the halfback now in order to stay bullish. They dip below that halfback and down she goes. Then when the D period pushed back down through that overnight high, I made note of the fact that the market needed to sell off as a way to squeeze the buyers from the upper end of the range. All right, with that, I am no longer bullish. We are now likely to get some buyers getting squeezed. So I absolutely expected the liquidation down here in the D period, but I couldn't in my wildest dreams have imagined that not only would we push below the overnight low, not only would we push below the previous day's low, but we would then close at the low of the day. So this was a lot more excess to the downside than I was expecting, but that's how markets work. If you're able to recognize when the momentum up is coming to an end, you know not to be trying to buy for a rotation back up. And then once the market starts to one time frame lower, you can choose to get short anywhere from that point on. So you could have chosen to get short anywhere in the E period, anywhere in the F period, anywhere in the G period, anywhere in the H period. All right, guys. Well, all in all, a very interesting day. They basically turned the ES into the NQ for a day. So that's fun. The fact that we pulled the fairest price to do business lower is bearish to see. And obviously the fact that we're closing at the lows is bearish to see. But take all of that with a grain of salt because the day also made a new all-time high, which is bullish. It completely engulfed the previous day's range, which is neutral. It completely engulfed the value, completely engulfed the previous day's value, which is neutral. And it is very common once the excess ends. So we broke out of balance. That led to momentum. When that momentum is over, there's two ways to balance off the momentum. You can either go sideways at higher prices, or you can pull back with price to back test that breakout of balance. So this could just be nothing more than a back test of the balance area that's going to turn around and make new all-time highs next week. So I wouldn't get overly bearish just because of this move, but it is a little bit bearish to see that we pulled that pulled that POC down and that we closed at the low of the day. So all in all, I think Monday and Tuesday will likely be a little bit tricky next week. You know, with the contract rollover, those couple of days around it are always a little bit tricky because everybody's kind of looking at slightly different levels. Everybody's got slightly different trend lines, you know, all of that type of stuff. So I'm not really bearish, but that is less bullish to see. Thank you very much for watching. Tune on in Monday morning on the Bookmap stream, and I'll let you know what I think is coming next.